Greetings and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MaidSafe. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 31st of August, 2018. Today I'm flying solo, so let's get straight into it. Topic number 1, the crypto roundup. Get the top 10 here. I don't think much has changed this week in terms of the order, but we've got EOS up 22.54% for the week, and IOTA up an amazing 42.05% for the week. That's pretty good for IOTA fans out there. But yeah, it looks like those are big winners. We didn't have any losers here in the top 10 for the week. Everything in the gain, everything in the green. Let's have a look here at the total market cap. We started the week at 211 billion and we've ended at 225 billion. A very nice move upwards. On to Blocktivity. What's happening over here? EOS still at number 1. Steam number 2, BitShares number 3, Ethereum number 4, Bitcoin 5, Bitcoin Cash number 6. It's had a huge leap up. I'm not sure why that is. That's very interesting. Komodo number 7, Dogecoin 8, Ethereum Classic 9, and for some reason number 10 isn't displaying. That's really weird. Why is their number system doing that? Okay, so let's have a look at Ethereum. It's the only one maxed out. Again, all the way up to 83, almost 84,000 unconfirmed transactions. I think that's about the highest I've ever seen it, frankly. That's huge. Not sure what is going on there. That's a pretty big increase over what we've seen. And what else is happening here? Bitcoin's pretty high. Nearly half. That's odd. I wonder if it's a bit odd to me. I thought they had reduced it quite a bit with their forks they've done, but it's almost at half. Bitcoin Cash is up at a bit more than usual too, I guess. But that's I guess I would expect that, given that it's come up from below number 10 to number 6 this week. All right, on to the MaidSafe update. This week's summary. Today, they're releasing the Safe Network Fundamentals. There's a section below. I'm going to read through that here in a minute. Pierre Chevalier, probably not saying his name right, Doug Campbell, and Sarah Pentland met a few community members on Wednesday at the Safe Network London meetup. Pierre gave a presentation about Parsec, and you can check out the video of Pierre's presentation here. I'll have the link to that in the show notes, but it's on YouTube. It was a really nice talk. I listened to it last night and found it quite informative, very helpful in helping to understand Parsec better. Okay, the next item, a quick heads up that the date of the next Safe Network Chicago meetup has now been set by Sotros25. It is for Saturday, September the 15th, with the topic of exploring the front end. And lastly, this week, the Alpha 2 network reset is now complete. See this topic for more info on what had to be. I think there was something to do with DigitalOcean servers or something. They were doing some kind of update and it messed up the network somehow. Anyway, check it out. It's all on the forum here. They've got a topic for that if you want to know more about why they had to reset it. Okay, Safe Network Fundamentals. I guess in short, it's privacy, security, and freedom. 3 words that mean something to everybody, everything to some of us, yet slightly different things to many of us. Today, we're releasing the Safe Network Fundamentals. Collectively, these concepts have driven every stage of the design of the network ever since the project started back in 2006. In the years that have followed, the Safe community has grown, and we are delighted to see just how many people and projects have come to recognize the vital importance of a global, secure, and private decentralized platform for storage and communication. As the numbers who support the project grow, it is crucial that everyone of the core team, the safe community, and the many who join the project moving forwards are all speaking the same language when discussing the goals for our future. In this way, we should be able to minimize confusion and help everybody to understand the scope of the vision, no matter what their background might be. We'll be going into these points in more detail next week, adding some additional context for newer members of our community. So the fundamentals here. The network will, number 1, store data in perpetuity. Number 2, allow a person to create an account and log in anonymously and without intervention. It may require a payment to do so, which may also address account creation spam. Number 3, allow users to associate multiple identities, key pairs, to their account. Number 4, allow users to securely and with no controlling intermediaries share information and messages. Number 5, ensure client-to-client direct messages are free. Client-to-client messages involve traversal through the safe network. Will be charged. I'm a bit confused about the phrasing there. Number 6, allow users to anonymously create and share data worldwide. Number 7, enable anyone to browse content free of charge. Number 8, allow users to use any of their identities to send-receive SafeCoin. Number 9, allow any users on any machine to use the network but leave no trace of the user on that machine. Number 10, allow transfer of SafeCoin to any other user free of transaction costs. Number 11, not use any ClearNet service. Number 12, not use time as a network tool. Nodes may use local durations. Number 13, allow real-time upgrades in a secure manner, i.e. the network will refuse upgrades that could break it. This requires significant effort, and nodes may run upgrades in parallel to existing working code before upgrading. Number 14, require no passwords stored on the network or on the client machines that access it. Number 15, not have servers in the usual definition of a server. Number 16, only use encrypted services, no ClearNet, perhaps except for initial retrieval of the core code via HTTPS. Number 17, scrub all client IP addresses from hop number 1 of our overlay network. Number 18, only accept more vaults when it requires them. Number 19, increase farming rewards when it needs more resources, vaults, and decrease rewards when resources are plentiful. Number 20, rank nodes over time and increase trust in higher ranked nodes. And last, number 21, digitally sign all transactions. SafeCoin is the unique incentivization mechanism built into Safe network, and on launch will be distributed as follows. Pay the creators of the network, maidsafe shareholders on launch, 5% of total SafeCoin. Pay the crowd sale investors of the network on launch, 10% of total SafeCoin. SafeCoin will be distributed on an ongoing basis. Pay vaults for providing service, 85% of rewards. Pay developers who produce apps that people use, 10% of rewards. And pay the maintainers of the network code, 5% of rewards. So I'm not going to go into any more of the update this week, but they've got a marketing section. They talk about the London meetup, and they've got a user experience section, Safe API and app section, Safe Client Libs, libraries section, routing section, and Crust section. So a full update again this week. Please come check out the MaidSafe update and learn what's going on over there. Next topic, the weekly news. Firstly, I want to start with a bit of an update because a couple weeks ago, 3 weeks ago, I did a show where I talked about Petrol and what was happening there, or what Venezuela and President Maduro seemed to indicate was happening there. But this week we've got an article out of Cointelegraph. No sign of the Petro here. Mystery and confusion besets Venezuela's crypto revolution. So let's just have a read of this. Reuters has, today, August 30th, published an investigative report into Venezuela's national oil-backed cryptocurrency, the Petro, attempting to square government claims with facts on the ground and evidence of the Petro's transaction history to date. Reuters dispatched reporters to the central Venezuelan hamlet of Atapuerre, I'm not sure how to pronounce that, which sits at the heart of the 380 square kilometer territory that the president has said can provide the 5 billion barrels of petroleum needed to back the new cryptocurrency. Amid rampant hyperinflation in the Venezuelan economy, President Maduro last week introduced a rebranded fiat currency, the sovereign bolivar, which will have 5 fewer zeros than its alien predecessor, the Bolivar Fuerte. Now, the new currency has in turn been tethered to the fledgling Petrol, valued at around $66, the price of 1 barrel of Venezuelan oil. The Venezuelan-born energy policy expert Francisco Monaldi told Reuters that the allegedly oil-rich territory lacks the crucial infrastructure, including roads, pipelines, and power generation facilities to extract the reserves. Monaldi noted that there is no investment plan for this area and no reason to think it would be developed before other fields with better conditions. Reuters investigators claim that the area on the ground showed little sign of oil industry activity, with only scattered and weathered rigs to be seen. The article also refers to a recent opinion piece from former oil minister Rafael Ramirez, who has estimated that reviving the area would cost at least $20 billion, that's in US dollars, I guess, an astronomical sum for the debt-saddled state-owned oil firm PDVSA. Ramirez has reportedly written that the petro is being set at an arbitrary value which only exists in the government's imagination. I guess that would be true because currently I've not seen any market for the petro cryptocurrency on any exchange. Someone please let me know if that's incorrect, but I think it seems like they're just setting it very arbitrarily. There's no market for it. So anyway, to continue, as Reuters notes, the petro does not currently trade on any of the major international crypto exchanges. Oh, they've just said it. Hong Kong-based Bitfinex told Reuters that it officially banned the token from its platform in the wake of U.S. sanctions. Other exchanges, including Coinbase, Bittrex, and Kraken, reportedly declined to comment as to why they have chosen not to list the petro. Well, those are all exchanges in the U.S. I wouldn't expect them to list the petro in any case, but I'm curious about some of the other international exchanges and why they have chosen not to do so. Of the 16 minor exchanges that are said to support petro trade, Reuters could not discern any internet presence for 7 of them. 7 others reportedly did not respond to requests for comment. Only India-based CoinSecure has publicly pledged to support the petro in exchange for royalties from Venezuela. So I guess it's on some minor exchanges somewhere. I'm not aware. People, if anybody knows, please send me links. I'd like to see what's going on there. Reuters further undertook an effort to probe official statements from President Maduro that sales of the petro have raised $3.3 billion to date. According to the Petro white paper, Singapore-developed NEM tokens serve as the preliminary token for the initiative, later to be exchanged for petros. According to Reuters, records from March show that a NEM account allegedly operated by the Venezuelan government issued 82.4 million tokens as part of an ICO that was first announced in late February. Around 2,300 of those tokens were found to have been transferred to 200 anonymous accounts in early May, at a total value of about $150,000 based on Reuters calculations. In April, records reportedly show that a single NEM account issued a total of 13 million tokens to around a dozen accounts, which Reuters calculates could have raised about $850 million. While the issuance in question is said to have targeted major investors, no one has reportedly, to date, publicly confirmed having made an investment of this scale in the petro. Tom Robinson of the UK blockchain data firm Elliptic told Reuters that this certainly doesn't look like a typical ICO given the low level of transaction activity. We have found no evidence that anyone has been issued a petro, nor of it being actively traded on any exchange. Cabinet Minister Hugbel Roa reportedly told Reuters last week that the technology behind the coin is still in development and that nobody has been able to make use of the petro, nor have any resources been received. Ahead of Reuters investigations, significant voices from the Venezuelan crypto community have this month similarly scathingly denounced the Petrol as little more than an opaque stunt backed by a centralized and debt-crippled entity. Well, it's certainly looking to be the case. Certainly looking to be a scam coin at this point in the game, and given that governments issue scam fiat currency all the time, it's no surprise that they would try to issue a scam cryptocurrency. Why not? It's kind of written into the hard-coded into their business model. Our next article, new data from CFTC shows bearish Bitcoin futures are on the decline. Bearish positions for non-commercial contracts of Bitcoin futures are on the decline according to the latest commitments of traders COT report released by the U.S. Commodity Futures Trading Commission, CFTC, on August 24th. For the week ending August 21st, the report shows that the net position on Bitcoin futures declined by 1,266. Short positions fell by 210 contracts to 3,426. So that's not a huge percentage, but anyway, it is a decline as compared with the previous week. With long positions up by 56 contracts at 2,160. Pardon me. As shown by the negative total tally, the market is still overall net short, yet 1266 is a sharp turnaround from the minus 1926 recorded June 5th. The fresh data appears to reveal a trend away from bearish sentiment, bolstered by strong price performance on Bitcoin spot markets. Well, so that's not really strong, but it's a little more positive. Maybe it is a sign that things are starting to turn away from the bear market. Possibly. Maybe. Lloyds of London to ensure custody platform for digital currency. So our next article. UK insurance market leader Lloyds of London will issue a crypto custody platform by US-based custodial firm Kingdom Trust, according to a press release published August 28th. Now, Lloyds of London, they insure insurance companies, basically. I think they're one of the biggest in the world doing that, so kind of a pretty big name. They've been around for a long, long time. Oh, it goes on to say that. Just founded in 1686, Lloyds of London is a British insurance firm that is active in over 200 countries. The company reportedly paid claims in the amount of £68 billion, $87 billion between 2011 and 2016. Kingdom Trust, which serves over 100,000 customers and has $12 billion in assets under custody, is reportedly the first regulated financial institution to offer qualified custody for digital asset investments. Kingdom Trust provides digital currency storage services for more than 30 different assets. The company is now launching insurance coverage for digital currency to protect investors against theft and destruction of assets. Matt Jennings, CEO of Kingdom Trust, said, "Qualified custody by a regulated, insured financial institution is a top priority and critical hurdle for institutions to invest in the digital asset market. By adding another trusted specialist like Lloyds to our platform, we're ensuring that current and future clients will have access to a highly secure, complete safekeeping solution tailored to meet the challenges of institutional finance." In an interview with Reuters, Jennings declined to disclose the identity of the insurer that underwrote Kingdom Trust coverage through Lloyd's marketplace or the cost or terms of the policy. However, he noted that Kingdom Trust received a drastic discount because of its technology, a type of cold storage in which digital coins are stored offline. Last month, Cointelegraph reported that insurers such as AIG, Alliance, Chubb, and XL Group are increasingly offering coverage options to protect businesses in the crypto space. Aon, a major insurance broker that claims to occupy 50% of the crypto insurance market, is reportedly seeing more crypto-specific protections catering to the new industry. Martian McLennan said that 2018 has been brisk for crypto insurers, revealing that it formed its first ever dedicated team to brokering policies for blockchain startups. So this is nice news. I like to see, this sort of thing. I'm really keen, as listeners who've been following me for a while are probably aware, I'm quite keen to see institutional investment come into the space. And as these custody solutions are implemented and insured now, more and more are getting insured, that's really going to put a lot of trust in the traditional financial markets to start bringing their institutional investors into the crypto space. So I think this is really, really important news. Next article. Investment firm Morgan Creek launches digital asset index fund, excluding pre-mined cryptos. Morgan Creek Digital, backed by the institutional investment house Morgan Creek Capital with $1.5 billion in assets under management, has launched a new digital asset index fund in partnership with Bitwise. Forbes reports on August 28th. The new fund will give accredited investors, endowments, pensions, and other approved institutional investors the possibility to gain indirect exposure to Bitcoin, Ethereum, and 8 other large market cap assets, though notably not Ripple, XRP, and Stellar XLM. This is reportedly because assets such as Ripple and Stellar were created through a pre-mine, meaning that a proportion of the tokens were created and allocated to the project's founders or developers before the token sale was made public. As Morgan Creek Digital partner Anthony Pompliano told Forbes, if there's a central party that owns 30% or more of the supply, then we withhold those from the index, those tokens, because we think that introduces a lot of additional risk that may not be there if it was a more decentralized network. That's very true, and why a lot of people, like myself, do not like Ripple and Stellar, and many other coins that have done similar sorts of things. Okay, this also applies to tokens such as Tron, NEO, and NEM, which could reportedly in the future be excluded on the same grounds. As Forbes notes, the centralization of some cryptocurrencies carries perceived regulatory risks associated with potentially heightened vulnerability to market manipulation on the part of large percentage token holders. There is also the future possibility that regulators could classify such tokens as securities. Pompliano told Forbes that he is confident institutional investors will be interested in the fund regardless of whether the assets are deemed securities or not, while Bitwise co-founder Hunter Horsley has reportedly confirmed that the decision to exclude pre-mined assets was based on concerns over potential fraud and manipulation alongside the regulatory uncertainties surrounding the security status of tokens with centralized ownership. In addition to Bitcoin and Ethereum, Morgan Creek's index includes Bitcoin Cash, EOS, Litecoin, Zcash, Monero, Dash, Ethereum Classic, and Omisa Go. The assets will be held in the fund's market cap weighted basket to be recalculated monthly. As of fall 2018, the fund will be overseen by Bitwise auditor Cohen and Company, with results published annually starting in early 2019. Alongside its restrictions on pre-mined coins, Morgan Creek is stipulating custody qualifications, trade concentration limits, and cold storage requirements, which disqualifies several other cryptos from consideration for the new fund. Neither IOTA nor Cardano meet the cold storage custody rule, while VeChain, VET, which is reportedly traded largely on one exchange, Binance, doesn't pass the exchange concentration rule. As Cointelegraph has reported, this spring, government regulator Gary Gensler argued that altcoins such as Ethereum and Ripple could likely be considered unregistered securities based on their token presales. Developments since then have seen the U.S. Securities and Exchange Commission rule that Ethereum has now been sufficiently horizontally established through mining to disqualify it from a securities classification. Ripple continues to face an ongoing lawsuit over its alleged sale of non-compliant securities. So there you go, another potential avenue for institutional investment. This one looks very serious and very well thought out. And yeah, I think this is really exciting. Our next article, German financial group to launch crypto index funds for institutional and retail investors. So more of the same. It's really starting to happen. There's just more and more of these happening, and it's really starting to explode. Iconic Funds, the asset management arm of Germany-based Iconic Holding, the team behind the ICO and token sale accelerator program, Iconic Lab, is launching a series of digital asset index funds beginning in Q4 2018. The company announced on August 17, 2018. Investment into crypto assets will become available through traditional and regulated financial vehicles such as exchange-traded funds, ETFs, and exchange-traded notes, ETNs. The first digital asset index fund is planned to be launched under Maltese jurisdiction as a professional investor fund. It is currently under review by Malta Financial Services Authority, the MFSA. The company claims the diversified exposure to the digital assets market as a key selling point for this new series of instruments. An investment fund essentially hides the intricacies of crypto assets from its participant, offering participation in a selected group of tokens. An investor expects that even if some tokens of the group won't perform well, The group of others will compensate for it. Well, that is a nice point to most index funds. Iconic Fund says the company will offer its financial products under the supervision of a governmental watchdog, such as MFSA for Malta. The team explains that for many conservative investors, the lack of regulatory oversight was a key reason to avoid exposure to crypto assets. Maximilian Lautenschläger, Iconic Holdings managing partner, believes that such investment vehicles could help bring new capital to the cryptos industry from the traditional financial markets. Iconic's aim is to make ICOs and crypto investments accessible to institutional investors, family offices, and retail investors. Only through such regulated vehicles can we open the doors for the trillions of capital from institutional markets to enter the crypto markets, Lautenschläger said, according to the announcement. Later, Iconic Funds also plans to offer other financial products suited for traditional investors' demands, such as crypto index exchange-traded funds and notes. The company says that Iconic Funds is not merely a traditional asset management firm that started trading in crypto. It is rather a part of a larger community-driven ecosystem that Iconic Holdings has built around its own token, ICNQ. Initially released by Iconic Lab, the ICNQ token functions as a decentralized VC club membership instrument. According to Iconic Funds, its holders receive access to pre-sales of companies graduating Iconic Lab's Token Sale Accelerator program. It can also be used as a voucher instrument for payments within the asset management ecosystem created by Iconic. So, I'm going to go on with that, but you can see the trend continues. Yahoo Finance, so next article, Yahoo Finance integrates Bitcoin, Ethereum, and Litecoin trading. So this to me seems like really big news. Yahoo's a pretty big outfit. They're a big platform, been around a long time. While statistics are available on the platform, did I start at the beginning? Oh, no, here. Yahoo Finance has integrated trading with Bitcoin, Ethereum, and Litecoin on its platform. Then we've got an image here showing Bitcoin price, and you can buy and sell right there. While statistics are available on the platform for other digital currencies like Bitcoin Cash, Ethereum Classic, and EOS, they currently do not have buy and sell options. The development has led some in the crypto communities to say that it is an important step forward for crypto adoption. Crypto enthusiast and founder of Morgan Creek Digital, Anthony Pompliano, tweeted, "You can now buy Bitcoin, Ethereum, and Litecoin on Yahoo Finance. The virus is spreading." Bitcoin continues to trade near the $7,000 price point, according to Cointelegraph's Bitcoin price index after it broke through the $7,000 threshold on August 28th. Ethereum, these are just trading prices. Skip down. In March, the Japanese arm of internet giant Yahoo said it will open a cryptocurrency exchange in April 2019 or later. Yahoo Japan was going to buy 40% of BitArg Exchange Tokyo in April and immediately dispatch executives to lay the foundations for the exchange to launch a year later. So that's pretty exciting. More places to buy Bitcoin and Ethereum and Litecoin. Yahoo Finance, they're a pretty big player, I guess, in the scheme of things. Our next article was a report. Huobi acquires, that's an exchange, the exchange Huobi, acquires controlling share in investment company via backdoor listing. I found this article kind of interesting. Chinese cryptocurrency exchange Huobi has reportedly acquired the controlling stock interest in Hong Kong-based Pantronics Holding Limited through a backdoor listing deal, says local news outlet JRJ.com, reported August 27th. A backdoor listing, which is also known as a reverse takeover or reverse initial public offering, allows a privately held company to purchase a publicly traded company, avoiding the public offering process, regulatory issues, and due diligence. Upon completion of the deal, the buyer gains automatic inclusion on a stock exchange. So basically, folks, Huobi has just got themselves listed on a real stock exchange without having to do an IPO. So if the traditional markets won't come to the new crypto markets, the crypto markets are going to go to the traditional markets and take them over. So I just thought it was so funny. Huobi reportedly acquired 73.73% of Pantronics Holdings, which makes the crypto exchange the actual controller of the power-related electrical and electronic products manufacturer. Folks, this doesn't have anything to do with Huobi wanting to own an electronic manufacturing company. I think they just saw them as an easy target for acquisition and allows them now to basically be the de facto company that's listed. So Pantronics is basically effectively a subsidiary now of Huobi, and Huobi is now effectively what is being traded when you buy or sell Pantronics on the exchange that Pantronics is listed. Pantronics halted trading of its shares on the main board of the Hong Kong Stock Exchange, so that's where it's officially traded, on August 22nd due to a possible offer to be made under Rule 26 of the Hong Kong Codes on takeovers and mergers. Now, that's just a temporary takedown. They have to freeze while these takeovers happen, but it will be relisted if it isn't already, or tradable again. When asked whether the exchange intends to conduct a backdoor listing, Huobi CEO Li Lin reportedly said that it is just a rumor, end quote. Li stated the exchange business is currently not fully compliant on a global scale, so a backdoor listing would be very difficult to operate. He says this even though they're actually kind of doing it. So Li added that he believes the traditional financial market will embrace the blockchain economy in the future. Yes, whether they like it or not. On July 30th, Cakeson Media reported that the Hong Kong Exchange was preparing a revision of rules to take stern measures toward backdoor listings within its efforts to clean up the market and improve the quality of listed companies. While the proposed measures are reportedly not aimed at blocking backdoor listings, they intend to ensure that companies do not skirt rules and undermine investor confidence. David Graham, Hong Kong Exchange's chief regulatory officer and head of listing, commented, quote, "We essentially allow a backdoor listing, but what we want to ensure is that when this happens, the quality of the assets and the ultimate combined company to be listed on our exchange have been through an appropriate due diligence and vetting process." Huobi token is currently trading at $2.35, according to CoinMarketCap, having gained almost 8% over 24-hour period, while some media attribute the token's price surge to the recent acquisition. Pantronics Holdings Limited's market capitalization is currently over 926 million Hong Kong dollars. That's 118 million US dollars. So that's just fun. We can maybe anticipate that more of this might happen in the future. And their last article this week, the Bitcoin Cash Drama, battle lines drawn ahead of scheduled hard fork. Controversial and untrusted figure in the Bitcoin Cash community, Cobra Bitcoin, may prove to be the saving grace for the network's future after a highly contentious dispute between Bitcoin ABC and InChain threatens to split Bitcoin Cash into competing chains ahead of a scheduled hard fork in November. Cobra, the anonymous owner of Bitcoin.org and previous critic of Bitcoin Cash, announced the Cobra client hard fork in a Medium post and dubbed the upgrade, quote, a safe implementation of the Bitcoin Cash protocol, end quote. The proposed upgrade is in response to the mostly non-important and non-urgent changes proposed by major developers Bitcoin ABC and InChain. That was a quote as well, I suppose, from Cobra. Mostly non-important and non-urgent. I guess that's all a matter of opinion, but... So Bitcoin ABC, the biggest Bitcoin Cash client, initiated the stir in the Bitcoin Cash community after it released version 0.18.0 of its full node Bitcoin Cash implementation on August 20th, which included major software changes like canonical transaction ordering and 2 new operation codes, opcodes. Bitcoin ABC's proposal came days after InChain, Craig Wright's blockchain development firm, announced their own fork of Bitcoin Cash, Bitcoin SV, or Bitcoin Satoshi Vision, on August 16th. InChain's upgrade has seen support from CoinGeek, the largest Bitcoin Cash mining pool. InChain's Bitcoin SV will increase block size from 32 megabytes to a whopping 128 megabytes. The whopping was my own phrasing. And reinstate 4 Satoshi opcodes in an effort to restore the original Bitcoin protocol. Wright opposed the addition of new opcodes and other arbitrary changes to the network and stated InChain would revert to version 0.1.0 implementation in order to preserve long-term stability for Bitcoin Cash. Jihan Wu, Bitmain founder and major supporter of Bitcoin ABC's initial hard fork of Bitcoin in 2017, weighed in on the debate and dismissed Craig Wright's baseless opposition to the fork, calling him a fake Satoshi. Ethereum founder Vitalik Buterin also took a strong stance against Wright, saying in a tweet that the Bitcoin Cash community should not compromise with Craig Wright to avoid a split and should embrace it as an opportunity to conclusively ostracize and reject him. Buterin called Craig Wright a there's a little icon there. I think it's maybe a fraud. It's in the quote. I'm not sure if that's the link or if that's like a kind of like, you see the exclamation point and hashtag when a curse term is used. I'm not sure what's meant there. So anyway, he called him a fraud after hearing him speak at the International Blockchain Forum Deconomy in April, alluding to Craig's claim of being the creator of Bitcoin. Anyway, so Cobra proposes a compromise to settle the drama. Cobra previously caused outrage in the Bitcoin community after suggesting changes to Satoshi Nakamoto's white paper and also suggested changes to the original Bitcoin proof-of-work consensus algorithm, stating a need for more decentralization. Now, in an apparent effort to save the reputation and future of Bitcoin Cash, Cobra is pushing for a sensible approach to the network's upgrade to avoid a split. Cobra stated the necessity to avoid interrupting service to users, which will cause irreparable damage to Bitcoin Cash's reputation and value, and that if there is no consensus, then it is best not to make any changes at all. Cobra Client is a conservative approach and won't add any new changes due to the lack of consensus on new opcodes and canonical transaction ordering proposed by Bitcoin ABC. Instead, Cobra's fork will implement replay protection to prevent Bitcoin Cash transactions from being duplicated across alternate chains. In case of a splintering of Bitcoin Cash, which still has a strong possibility. Cobra Client solicited support from a broad portion of Bitcoin Cash stakeholders to prove that the upgrade is a viable option for the Bitcoin Cash protocol. Cobra Client claims to have nearly 25% of existing Bitcoin Cash hashing power backing the upgrade, and that a major exchange will continue the use of Bitcoin Cash ticker symbol after the changes in November. Cobra Client also addressed the decrease of Bitcoin Cash use in commerce by securing deals with major businesses that have agreed to test the upgrade. Bitcoin ABC, who is responsible for the original Bitcoin Cash hard fork in 2017, and Craig Wright were once in unanimous agreement that Bitcoin Cash was Satoshi Nakamoto's true vision for Bitcoin, but the new updates have caused a schism in the Bitcoin Cash community, with InChain and CoinGeek claiming Bitcoin ABC's recent move is a deviation from Satoshi's original white paper vision. Proponents of Bitcoin ABC's changes argue the new features will make implementing a smart contract framework in the protocol more efficient and improve scalability. Around two-thirds of node operators use Bitcoin ABC, but that could change if a compromise between developers isn't reached soon. Wright, who claims to be Satoshi Nakamoto, stated in a recent blog post on Medium, quote, "Something people fail to understand about Bitcoin is that it is intentionally limited. This is purposeful. It is designed to be stable money, and for that reason, it is not designed to have new opcodes added outside the need for a few security-based replacements or to be altered." CoinGeek is the largest Bitcoin Cash mining pool and supporter of InChain's proposed changes. The mining pool experienced an increase in its hash rate to 28% around the same time of the announcement of Bitcoin SV. So there's a little graph here showing CoinGeek currently at 29.5%, BTC.com and Antpool at 19.3%, and all others at 51.2%. Peter Razoon, the chief scientist of Bitcoin Unlimited, a development team accounting for nearly one-third of all full node clients, tweeted his position on the matter, saying Bitcoin ABC should hold off on its plans until more evidence proves its benefits. The Bitcoin Cash community, tuning into the drama, is keeping a close eye on mining pools, since miners ultimately cast the vote with their hash power. The conflict between the Bitcoin community represents an ideological schism among developers' vision for the future of Bitcoin Cash in accordance with principles set forth in Satoshi's original white paper. The Cobra Client upgrade is a safe bet, but Bitcoin ABC and InChain's fundamentally opposing positions makes a split of Bitcoin Cash seem inevitable. Well, it may. We'll have to see what happens there. It's interesting times ahead for Bitcoin Cash, and could be a fair bit of drama for the overall community, crypto community, as there's a lot of people still involved with Bitcoin and Bitcoin Cash, and how this all plays out could be quite interesting. All right, folks, that's all I have for today. Thanks for joining the show. I hope you found the episode informative and helpful. Please subscribe, like, comment, and share a video with others. And tune in next week for another interesting episode. Bye-bye.